You can't take it with you when you're gone, so how do you make the most of it while you are here? It's time for Your Money Matters with Sam and Dieter from Harness Financial.
And we got Sam in the studio today. You got a guess for us, Sam?
I do. I have Chris Jex, who is the director of GYB Insurance. What does GYB stand for, Chris?
Thanks, Sam. So GYB stands for Got Your Back.
Nice name, sorry.
Yeah. And you're a medium-sized fire and general insurance advice firm in Wellington.
Yeah, that's correct. So we're based in Lower Hutt, and we've got a team of 11.
But you work around the whole country?
That's correct. Yep. We've got clients from north right down south.
So I'm going to go out there and say it's a bit of a clickbait title today, but it's an important one. And I know people are really passionate about this question, and a lot of people are hurting at the moment as well. And the question is, why is house insurance so expensive?
Yeah, straight into it. Great question. So I think New Zealand as a whole, obviously everyone's aware that home insurance premiums in particular have gone up significantly in the last few years. Realistically, we are a small country with a small premium pool and are susceptible to natural hazards such as earthquakes and the odd flood and storm event. And obviously we're also going or have been through a period of inflation, which obviously puts pressures on insurance costs as well.
True. If I think back to the biggest event in the last couple of decades, it was the Christchurch quake, wasn't it?
Yeah, without a doubt.
What did that do to the house insurance market and the fire and general insurance market in New Zealand in general? How has that changed the landscape? Yeah,
significantly. I think for us as an industry, and specifically we've got the EQC, or now it's the Natural Hazards Commission, or NHC.
Right.
And I think we had a lot of learnings from the Christchurch earthquakes. Obviously, there was a significant period where there was the reinstatement. I suppose it meant that we had the right procedures in place for any future events, which, we're now seeing or have seen recently with the Auckland anniversary floods and then obviously Cyclone Gabriel.
True. So if I remember correctly, before the Christchurch quakes, insurers would just insure a house for its replacement value. It's not the same anymore, is it?
That's correct. So initially they had, it was based on the area of your property.
Square metre size?
That's correct,
right.
Yep. And so I suppose the insurer's issue with that is they didn't have an understanding of their exposure at the time, and that's why we moved to a sum insured basis.
Yeah.
There are some changes to that. Some insurers now are providing, again, replacement cover based on the area or square meterage of your home for non-natural disaster risks, so things around fire or potentially flood, but ultimately will restrict the cover to the sum insured for a natural disaster event such as an earthquake.
Okay, so before the Christchurch quakes and before the repricing, am I right in guessing that people on the flats in Riccarton were probably paying a similar amount to people on the cliffs in Sumner? And that didn't make sense, did it?
No, exactly right. And again, that's one of the other major changes that we have seen in the industry is that the insurers have become a lot more, scientific around the way they price certain risks. So properties that are in flood-prone areas or in close proximity to the sea, or have other hazards, if they're built on a relatively steep section, would typically or will now incur higher insurance costs than those that are not susceptible to those risks.
Right. Sean, what's happened to your house insurance premiums over the years?
Well, I'm in a body corporate, but they haven't actually moved significantly because they're already hell of a high because we had water tightness issues. But I'll tell you what, here's an example of exactly what you guys are talking about. I know someone who actually works who's just bought a new home, right? Now, it's an unusual home. It's a 2-property body corporate.
Okay.
Semi-detached, right? And they have to agree on who insures the entire, if you like, complex, right? And they were looking at insurance premiums. She said, God, that's high for the square meterage. That's higher than the home I've moved out of. And she found there was a special premium there for the previous owner of her half of the body corporate because they had an Airbnb or something. They had tenants in. And there was a higher rating for having a property that would have tenants in it, or no, because it was tenanted before. So there was a higher insurance rating they have a tenancy. And she's now going through quite a complex process with the other half of the body corporate, her next door neighbour, figuring out, well, I'm not a tenant now, so we could get our costs down. She also found that she's paying significantly more. She's got a carport or a garage, right, that is being assessed in square metre size at the same replacement value as a kitchen or a bedroom, and of course it's not.
That's
so
really
I've been looking at this thinking, wow, and then you guys come up and say you're talking about home insurance. Very interesting.
Well, this is where advice comes in, right?
Yeah.
If you speak to a direct insurer, you are probably going to have a number of computer says no experiences. But you probably, if you've got a unique situation like that, need advice and a tailored solution. Do you want to talk a little bit about, Chris, some of the ways that you provide as an advisor broker tailored solutions for clients?
Yeah, absolutely. So, I mean, insurance is a complex product. There are a lot of variations in terms of the different products that are available in the market. And for us, when we are engaged by an insured or a client, we work on their behalf. So ultimately, it's our role to know and understand the risks, whether it be their property or business, to know the risks associated with that, provide advice around the correct levels of cover, and also any limitations in the policy. One of the things that we often see that people aren't aware of are limitations with things like retaining walls. So if you're on a steep section or something on those lines, having an understanding of what those restrictions are and potentially looking at things like an insurance valuation or one of the online calculators to make sure those items are either specified or sufficiently catered for.
Sure. Chris, I wanted to ask you too. I've got someone I do my auto insurance with, and probably, stupid me, I'm more interested about having my vehicle insured than my home. And they're a big name insurer, and they've always actually been really excellent, really, really good.
You do love your car.
Yeah, I do love my car. And they offer some other products, and I tend to think if they can do everything for me, I do. Is that always the best way? Bundled, you go to one company that covers everything, or if you like, are there deals to be done? Part of me too is the administration drives me out the wall. Can you negotiate a better bundle deal with me than I could on my own? How does that work?
Look, it really depends. One of the key considerations we're looking at, obviously cost is an important factor, but we're wanting to make sure that the covers are actually fit for purpose and they're going to work in the event of a claim. There can be some benefits to multi-policy discounts if you were to bundle it with a single insurer, but then again, it is important to look at the variations. So it really comes down to your specific circumstances and what is right for you. And that's, again, one of the benefits of using an advisor. We can go out, do a needs analysis and make sure that we get the right covers in place.
Yeah.
So I know that there are a number of platform listeners that are property investors and business owners, and I'd like to talk about both those groups. Am I right in understanding that a lot of landlords don't actually have sufficient landlord cover on the properties that they have tenanted?
Yeah, so I suppose with any rental property, there are some set risks that a lot of the, again, there is a lot of variation in the products that are available.
Sure.
So for us having landlord's protection insurance, and there's a couple of insurers that have really good products in relation to that to cover things.
Is that an add-on?
That is an add-on to most products.
Right.
And that will cover things like your loss of rental income, your landlord's chattels or contents, and also incorporate things or can include things like malicious damage caused by tenants and or non-payment of rents, etc.
How often do you see a malicious damage claim?
More than I'd like, to be honest.
I actually had one with you a few months ago, and goodness gracious, I don't know how some of these malicious damage episodes actually come about. It's crazy.
Look, the other thing I want to ask you, and got your back, I love the name of your business. It's a neat name.
Thanks.
People I talk to, I've lodged very few insurance claims in my life. The odd fender bender, but nothing huge. I think once, many, many years ago, for a burglary. And I was so peeved because the insurance company was going to pay me to go to the second-hand market to buy back all the CDs that had been stolen out of my house. So that's how long ago it was, the age of CDs.
Right.
I know, talking to people, a lot of it is the frustration of the claims process. Do you offer to help with that? It would be so, I think, helpful for many people to have someone who's got their back in that, entering that world, Byzantine world of forms and
Yep.
and tax.
Yeah, absolutely. And I think, again, it comes down to having an advisor. That is part of our role, obviously making sure you've got the right covers. But when you do have a claim, that we're your advocate, so we're working on your behalf to ensure you get what you're entitled to.
Yeah.
You have a dedicated claims manager at UAB too, don't you?
Yes, we do, yep.
Yeah.
Yeah.
That does make a big difference. Just, it's funny how you say you haven't made many claims. From my perspective, often there are a lot of historic claims that people could have made, but they don't make, right? If that's the case, then perhaps one's low excess is the wrong choice. So if you want to manage your own, self-insurance, and that's what you do. You haven't claimed on your phone, or you lost whatever, or a small damage done to the house, and you've got an excess of 0 or 250. That might not be the right choice for you. How often are excesses small and untouched?
It's certainly an area we're looking at more and more now. I think people are really keen to try and mitigate some of the cost increases that have come through. So for us, the excesses are really good way in which we can look at that. And often there are some really good discounts available, particularly on your home insurance, where we're finding now people are having a $1,000, $2,500, or even $5,000 excess. And sometimes you could be talking a significant saving compared to the standard sort of $250 or $400 excess. So provided you're not claiming every year, you're actually going to be better off, in some cases, taking a higher excess.
Yeah.
Yeah.
Well, I hate to say too, in times of economic constriction, when times are tough, we hope they're getting better. Some indications they are. Because it's not an immediate benefit thing in insurance policy, is it a place where people perhaps irrationally say, I'll just cut the cost, I'll cut back the insurance, I won't bother about the insurance right now? It would seem to me it's one of the things, perhaps incorrectly, that is most likely first to go when you're trimming your sales.
Yeah, I actually think that that generally people cancel the insurance on themselves before they cancel the insurance on their assets, which is quite broken. I mean, you know, you don't want to cancel your income protection, because then if you can't work, well, you won't be able to afford your house insurance.
Yep, absolutely. But I think one of the challenges, again, with that is most banks will stipulate that you must insure your home if you have a mortgage. They won't necessarily say the same thing about you.
What about business owners? What are you seeing around the changes, the headaches, and the areas that don't tend to be insured correctly for business owners in New Zealand?
Yeah, so again, a lot of business owners or a lot of businesses are having some financial pressures at the moment, and insurance is one of those. And again, there are several different options that you can utilise to mitigate some of the cost increases. In terms of underinsurance, or areas that we see are often incorrectly insured, one of the most important covers for a lot of businesses is around their business interruption. It's also, unfortunately, one of the ones that's most commonly underinsured or incorrectly insured.
Yeah, I think a lot of people don't actually know what business interruption is.
I've got it. Whatever it is, I've got it.
What does it do?
Yeah, so
how would it help the platform?
Great question. So effectively, it is there to cover your loss in revenue or increased costs following a material damage claim or a claim on your property. So if you had a fire or flood or something that caused damage. Yep, absolutely. Earthquake, that's a big one in Wellington. And it is there effectively to cover your loss in profit or your additional cost to keep your business running.
Do you have any real world examples where you've seen a really successful business interruption claim and what it meant for the business?
Yeah, well, unfortunately, we have seen a few. It is something that does happen. We've had a couple of instances in the last few years of significant fires. And again, we had one in particular where, thankfully, we've been working with the client for a few years, and they had taken our advice. And their words at the end of it is that without that financial assistance, they wouldn't have a business any longer. So, it is a really important, and in fact, for most businesses, it's probably one of their main business risks.
Yeah.
All right. Look, oh God, you always do this to me. I'm now thinking, I probably should get on that for the business. If people want to get in touch, if they want to talk about insurance, if they want to be put in touch with the right people to help them, what do they do, Sam?
Well, you can contact Harness Financial through harnessfinancial.co.nz. You can also contact me, one of the directors, personally on 027 3344 812. But for fire and general insurance requirements, that's insurance on assets, liability, business, house, car, contents. Chris, what's your website? gybinsurance.co.nz. Yeah, and do you have an email address?
Sure, info@gyb.co.nz.
Cool. And does it cost for a review with GYB?
No, we'd be happy to undertake a review of your insurance requirements, and that would be no obligation and free of charge.
Right.
Good stuff. Good stuff. As always, guys, very interesting. And I've got much to think about. Yours make me worried. That is Your Money Matters with Harness Financial.
Your Money Matters with Sam and Dieter from Harness Financial. To make the most out of your money, visit harnessfinancial.co.nz.